welcome to another edition of Targets in Focus, where we ask an expert or currency trader their predictions for three currency pairs. Today we're taking a special look at gold and oil, as well as the euro versus the dollar, with Abdul Eldada, account manager at Trust Capital. Hello Abdul, thank you for joining us. Firstly, let's take a look at the euro dollar. This pair has been relatively flat today. Is this because we're ahead of the GDP figures for the Eurozone's fourth quarter? How much is this data affecting this pair?
Well, first off, the GDP hasn't changed. There was no there's no change in it. It was just nothing got changed. It was just one flat. And for the euro USD, it's a bullish break in the early December. Remains valid as long as price is above 1.2875. In fact, the former resistance line extended off in March, September, and October. Highs served as support last week. Structurally, the decline from 1.3307 may compose a flat. But however, our preference for long position above 1.288 with 1.348 and 1.383 as targets. The midterms and the short terms for that would be the euro and USD. It was going from it's a bullish break, from December till today. Like I said to you, it should decline from 1.3307 to 1.288, and it might rise again with the 1.348.
Looking at gold in the long term, many have said that there has been a gold wave. How are investors viewing gold now, and what are your predictions?
Well, with gold for midterms and short terms, the commodity remaining variable and bearish. It faces further declines in the new week. It now targets 1640.45 level with a cut through. They're allowing for a push further lower towards the 1600 level. A rescue is likely, to occur here and turn commodity higher. Its weekly RSI is bearish and pointing lower, supporting its view. All in all, gold remains variable, like I said, to a downside short term. That would be to a short term. But the alternative scenario, the downside, the duration, it would be around 1652, and we'll call for a slide towards 1643 and 1635.
Moving on to oil, crude oil prices have traded within a tight range since reaching a 4-month high last week. Again, how much are these prices affected by fiscal cliff talks, and what are your predictions for oil?
For oil, crude oil was climbing all week, with the U.S. fiscal cliff averted or delayed. But the restriction now behind crude oil now respond to fundamental with the Chinese data showing continued expansions. But the contract and trading bullish channel since of the beginning of the year 2013, we estimate that the bullish trend will reveal until reaching the price level close to 94. But however, there's a downside breakout of 92.4 and might open a way to 91.5 and 90.
Thank you, Abdul, for your insights and great trading advice. There'll be another Targets in Focus on Friday with Darren McDermott, so stay tuned to Dukes Copy TV. Take care.